Good afternoon, everybody, and welcome to this edition of our live market analysis. ASX specifically today. It is Tuesday, 14th of March. My name is Carl Capolingua. I'm the market analyst over here at Think Markets Australia. And what a day it is. If you're watching the ASX, it is red everywhere. One sector in the green, and that is gold. Tough times at the moment for investors. Hopefully we'll be able to get a picture on what's happening, maybe understand why it's happening a little bit better, and then more importantly than all of that, where to potentially from here. Let me get the camera going right there. Pretty simple today. Over to you. Hit the Q&A or the chat window. You could be watching me on the Zoom. That's our preferred way that you watch it because it's easier for me to collate and get to those questions, but everybody's welcome here on the live stream through YouTube, Twitter, LinkedIn, and Facebook, of course. I'll give you my best technical and fundamental analysis reader, hopefully plenty of how-to as well. Let's head over to here and get our charts going. Got a few requests already rolling in. First in best dressed today was Tanya with Duratec. Before I go, maybe let's do, and start the timer. It's going to be 2 minutes of macro, 2 minutes top down. Obviously starting here with the NASDAQ Composite Index, and the trend is your friend. Even before anybody ever heard of Silicon Valley Bank or Signature Bank or Silvergate, the trend had turned here, to be fair. We were seeing lower peaks, lower troughs. The long-term trend was at best neutral, never turned green, and the short-term trend then started to lose momentum, and the candles weren't great. So I think really all of these recent events just punctuating what was an uncertain market. You might argue bearish. I'd say look neutral at best, and we did say maybe it was last week, maybe it was the week before that, from the previous bullish stance we had at the end of January, early Feb, we're moving to a more neutral focus and preferring to be flat net on risk or directional risk, so longs versus shorts. Is there anything in last night's candles to suggest we're going to get a bounce tonight, or that is the low? It's all done and dusted. Everything's in the system now. We can move back into a bull market. No, it's not. It wasn't a great candle at all. If anything, the fact that it didn't take out the previous candle's high there from Friday, and we only closed at best mid-session, it's a pass, and only just a pass. Doesn't mean it's a terrible candle either. Probably 10.804. It may drift there. I don't see the big black candle that we're seeing in Australia in that system, but anything can happen. Certainly, I can't see it from what happened last night. If we look to some of the other risk-on indices, the Russell 2000 dropped to a key point of demand, actually found a little bit of support there and bounced off that. Still not a great candle, probably a D+, if anything on that. I couldn't even give that a pass because it did close well beneath its highs for the session, down from the previous day's close. But clear-cut short-term and long-term downtrends re-establishing their S&P 500, pretty similar, not as bad as the Russell, but not as good as the NASDAQ. Looking across to the Australian market now, and we can see here, based upon the midday candle, or the candle as at midday, bit of a wipeout through what should have been demand. The long-term demand zone now moving back into neutral, confirming that again, you shouldn't be having a whole heap of risk in the market, just at the time being. Short-term trend down and lower peaks and troughs, and plenty of black candles to boot. So it's a surprise, I guess. If you're not looking at the charts, things are a surprise. If you've been looking at the charts, things haven't been going the bull's way for many weeks now, at the very least. In terms of some of those key macro factors, I'll just very quickly show you probably the key chart from yesterday, which is not that one, the Hang Seng Index, but this one here, the big breakdown in the US 2-year Treasury note yields. So there was some of it, no doubt, flight to safety, but I would say the vast majority of this move, and the move is from above 5% to just above 4%, so a 100 basis point cut in interest rates by the market. The Fed hasn't done anything, mind you, but the market is saying we do not believe that the Fed will continue to increase interest rates. The current cash rate 4.75 to 5%. Markets were baking in, potentially a 50 basis point hike at the next meeting. Markets are saying, in fact, flat is probably more likely what's going to happen. And then sometime in the next 2 years, we're actually going to see some cuts from there. But it's bringing forward not only the pause, but potentially cuts down the track in response to the uncertainty that recent events have created. And this is an important chart for us. Normally, if it was a stock, we would look at those candles and we'd say, well, that is a species-ending event. That is a trend killer. What is more likely to happen if we do rally from here? We'll find another major point of supply and head down. I do believe that we are going to be flat at best here. So that is interesting. That can possibly facilitate an increase in stock prices if the data on the economy remains strong and the Fed at the same time, so this would be a little bit of a miracle, remains more on the dovish side of the ledger than the hawkish side of the ledger. But some things have changed. We've seen a tectonic shift in markets to create potentially different scenarios than we just had a week ago. And I can see one of those scenarios where stocks rally. It's certainly not impossible from here. Could things get a lot worse? Well, that all depends on what happens in the regional banking sector in the US. But there is a path with that breakdown in those two US twos. There is a path to lower rates, at least, or short-term rates. Okay, let's head over to that first request, which is Duratec. And nothing really else to do here. It's all hold. I'll just get back to the right chart for you. There it is. And yeah, look, I'm pretty happy holder on here. There is a little bit of weakness coming through, but the market has been awful, let's face it. So that isn't surprising, and probably neither is that nor that. But otherwise, today's candle in what is otherwise a wipeout on the broader index speaks to me of huge demand just in the system here. Not too fussed, not panicked at all about what's going on, and pretty happy to hold. And therefore, I think you do what the market's doing and hold on there without too much fuss. Where could it all go wrong? Happy with that, happy with that. Happy with the price action through here. So we'll draw some of that in as well. And we can see, importantly, that if this is to turn out to be a trough today, we don't know if it will. We can say that the last trough is at or above the second from last peak through here. And that's also a positive in terms of the price action. So in terms of good price action, this is our good price action as a reminder. So big thumbs up here. In fact, great price action. And what we don't want to see is too much encroachment on those second from last peaks from the last trough. Okay. And yeah, happy holder. Would I buy some? I would say if we can get back towards yesterday's high, that high there is 85.5. So, probably closing really here or better. Ideally, we close at the high. So let's go 85.5 or better. Yes, I could happily add some risk there. I know that sounds crazy, doesn't it? Just even be speaking about adding risk on anything. But on a chart-by-chart basis, if you have room within this overall portfolio neutral mandate, then certainly no complaints about adding some risk there. I'm curious whether we have any broker data on this one. I don't think we will. It's just too small, but we can certainly try for you, Tanya. And I think when we find a stock which has a great chart, there's no harm in checking to see if the fundamentals back it up. Look, without actually going into the nitty-gritty of the stock itself, and I can't do that given the time constraints we have today. I can't give you any more information than what's on screen, which is nothing. Let's go to the next request. Kant is online, by the way, from Think Market, so you can chat to him in the chat window, ask him any questions you have about the Think Market's offering or any customer support related issues. He is the person to speak to. Let's go to Jimmy. Jimmy's asking about Weebit, which has been one of the great success stories of 2023. Is it the supply event? Is it the species ending event? Interestingly, as recent as yesterday, you would have said no. I mean, look, it's not a great candle. Anybody who's been following these sessions for any length of time can look at that candle now with just completely different eyes, isn't it, than maybe you would have looked at the market just a few months ago. And you can just see that candle and you just know, look, it's not a great candle for the bulls. We can see even here on this candle, how we've got supply in the market, but it's fairly tentative, sort of mid-range close. There was actually some demand in that lower shadow as well. Certainly this candle here is no indication that we need to be doing anything really with our holding, but continue to hold based upon the previous trend. This is concerning. Look, when you blend those two candles together, it gets a bit nasty. And if you were really jittery, and I would say really jittery, you would look at that and you would go minus 1/3. And that's a really jittery one, minus 1/3. Today's more important. I think that is where you're seeing demand trying to hang on the previous two candles, but really on today's candle, demand's given way, hasn't it? And the supply is now sufficient to take over with demand now. Well, there being a demand vacuum. But today's candle is not finished. We've still got a few hours to go. If it closes down here, then I think you do start to think more seriously about this. Okay. Otherwise, if it can push back by the end of the day, and that's always a possibility, don't forget that this candle can show again by the end of the day and end up forming quite a bullish candle, a demand side candle, if all goes right for it. So if we get that move higher, and it's going to look a little bit weird for a second, but we'll see if we can't change it. This candle's not letting me draw what I want, but that's okay. Try that again. No, it's not. There it is. Okay, let's try. Okay, we got there in the end. So if we get a rally from today's current price, right, it will cause the candle to end up looking something like that. And in which case you wouldn't have to do anything at all. All right, you wouldn't be selling half, you'd be hanging on. We don't know the future. Let's see where it closes. Down here, then no issues with starting to do something like that. But you're still holding some of the trade here, right? You're still at least plus 1/3, I'd say, on this, given the strength in that short-term trend is still amazing, let's face it. And the long-term trend also is very, very good. I don't think we have done it, but I'm happy to check it out. You can't see this. Let me just go over here and see if Weebit does have any broker coverage. It may well do. We've never bothered to look. I've just always assumed it doesn't. It doesn't look like it does in there either. It's just not big enough, I guess, to be covered by the brokers just yet. Okay, let's two down. Let's head over to Marco, and Marco is asking for LLL, which I know is LeoLithium. And it always takes me a little bit of time to find this one because LLL doesn't actually get me to where I need to go. So let's try LM and head to it that way. Okay, so last time we looked at this, I reckon it was somewhere around here. That's just a guess. Check the tapes, but I'm guessing somewhere around here. Because I can see where I was drawing these green lines. Or maybe not. Maybe it was in there. Don't know. Bottom line is, what I would have said is I need to see some positive price action before we could contemplate buying. What would that positive price action look like? Well, it would involve high peaks and high troughs. The bottom line is we didn't see it. We just haven't seen the price action we need to see. So in the absence of that price action, the trend is down. That is very clear. You can see the short-term trend there is down. If you're not sure, it's the light pink zone. That's by 21 and 34 exponential moving average ribbon. The long-term trend doesn't exist yet, simply because if I zoom out, that's all I get. The company's only been listed since about June last year. So we don't have a long-term trend. In terms of price action, I'm going to get rid of this stuff just so I can draw it in without any impediments here. And we'll go from here to here. We'll go from here to here to here. And I think it's very handy. It's a good habit, I think, for you to get into is to draw this price action out. And we can see who's winning the battle, really, isn't it? If you have your points of supply are falling, right, progressively falling. Here are your points of supply. Each peak is a point of supply. How do you know it's a point of supply? Am I just making this stuff up? What was there supply there? It's really a point of excess supply, if anything, isn't it? That's probably the more accurate description. It's a point of excess supply. But if I was to go PO ES, it might be a bit more confusing pose, or POXSS. Might be a bit more. So let's just leave it as POSs, but it's a point of excess supply. You can only conclude that, and I love candlesticks. They are black and white. The conclusions you draw are also black and white. It had to be excess supply. Otherwise, the price wouldn't have stopped there, reversed, and gone down again. Okay, so the levels or the areas where there is excess supply are falling and falling and falling. Just indicates increasing supply in the market. And then you look at your pods, and we could, of course, also call this a point of excess demand as well, but we won't. And you can see how the pods are giving way. Each time there is a bounce, it's from a lower level, and that's because the demand effectively is running away from this thing, and that's not a good sign, is it? So is the market rushing in to buy LeoLithium? Potentially, because it's really cheap now. I mean, it was a 70-odd cent stock, and now it's only 45 cents. I mean, it's almost half price. And normally when things are half price, people say, well, that's cheap, I need to get in. And it is possible. It is possible that tomorrow, it happened on one stock, and somebody reminded me on Twitter, I think it was, or somewhere, that I covered a stock in this session. I said much the same analysis on screen. I can't see that the market likes this one. I can't see demand is rushing in to buy this. And all I can see really is supply is trying to get the hell out so they can get their cash back in uncertain times. And I would have said something like, look, for me, it's not a buy. Buy is 100% off the table, as in I cannot find a reason to buy this. I also can't find a reason to hold it. It's just too bearish. Maybe there's some hope. And I don't like to use that word when it comes to my investing. I'll leave that up to you. But there is some hope that there was some demand there in the past. Okay, and maybe there will be demand there in the future. But before you buy it, I think you want to see that demand manifest itself in the market with at least a couple of things. And those couple of things, of course, are the correct candles in that zone. And the correct candles would look something like this. And we all know that's about to change color. Okay, or the other candle you'd want to see in and around that potential demand zone. This is our potential demand zone. There was demand there in the past. It's possible it's there in the future. You'd want to see those coming in either here or here. Okay, but simultaneously, you want to see a return to the points of supply starting to increase and the points of demand also starting to build as well. Okay. So that is potentially a long way away before we could even contemplate adding some risk on this one. And just to get back to the story, it was another stock. It wasn't this one, but I said, look, it is possible. Or maybe I forgot to say it, but I said, look, buys off the table. I can't even hold it. And if I can't hold it, I'll probably sell. What I forgot to say is, look, it's possible because I can't see the future. The stock might rally the next day. And it turns out that there was one stock that looked like that. It did rally a lot the next day, and somebody criticized me in social media for getting it wrong. I get things wrong quite often, if you haven't noticed. But go. Look, if you don't like what I say, I'm sure there are plenty of talking heads on social media with hundreds of thousands of more views than I do that get it right all the time. Yep. DTL is the next one, and see, all I do is interpret what supply and demand is. That's all I do. I can't see the future. I can only see what's happened in the past and infer from what people are doing up till the current time, like literally right now, as to what their intentions are into the future. Fundamental analysts, by the way, are no better. They can't be any better because they can't see the future either. Now, it's no matter how good their fundamental analysis software is that looks at historical data and compares the current PE to the range of PEs over the last 5 years, and then finds some sort of margin of safety based upon those historical data. Now, let us get into data 3, which is also historically showing a very good trend. And historically, it is clear that when investors are deciding whether to buy, hold, or sell data 3, they are more likely to be inclined to hold on to it in the face of some pretty nervous market conditions, and also if they've got any spare cash around to add a bit of data 3 to the portfolio. Okay, so there's a bit of demand out there, a bit of cash trying to get in, and the sellers tend to be quite reluctant to get it to get out. Now, it's not rampaging up the screen, is it? It's a bit sort of sketchy. It's not the cleanest price action, but if you've got it, I'm a happy holder here compared to LeoLithium, where I just couldn't see a reason to hold it. So the market's been pretty awful, let's face it, but this one, compared to the rest of the market, is shooting the lights out. And you say, hey, Carl, this thing's only going sideways. How could it possibly be shooting the lights out? Well, on a relative strength comparison basis, it's beating the market's hand down. And you can tell that if you look down here at this bottom indicator, this is one of relative strength comparison over the last 34 periods. It's about a month and a half, isn't it? But there's that Fibonacci number coming back into it. It's just the one I like to use. And you can almost trade just based upon this indicator, can't you? Just saying, look, this thing is beating the market. Therefore, the fund managers are allocating capital here rather than allocating it elsewhere across the market. Think about what that means. Are they allocating their capital here because they think it's a piece of junk? Or are they allocating it here above all the other stocks because they think there's something good going on? Anyway, you make your own mind up. I think this one's fine. I'm a happy holder here. Would I buy it? No, it's just too boring. And the price action is too overlappy. But if you're on it, I can't see anything to be too concerned about. Now, is it possible that tomorrow the company announces that the CEO has been embezzling funds? He's embezzled billions of dollars he's been down at the pokies. Yes, it is possible. It is absolutely possible. It opens at 460 and goes down. I can't see the future, but all I can see is up to this point, and even today, investors are pretty happy with that one. So I think you should be as well. Let us head over to the Excel spreadsheet here. This is the data from Thomson Reuters, Refinitiv Icon product. DTL is the company. I punch that in, and what the software does is it goes and retrieves through here a bunch of broker estimates, and no doubt we're going to have some broker coverage on this one. Feeling a bit slow today. Here we go, 7 estimates, and they will give us a target price generally and a rating, a buy, hold or sell. They'll also give us their estimates for various financial metrics into the future, and Thomson Reuters has already collated the various financial metrics for the past. And then down here, my spreadsheet, this is my intellectual property now, uses a few fancy formulas, doesn't it, to try and understand, based upon a target PE that I can supply it, and a risk rating, so manipulating the rate at which I discount back the future cash flows, whether it's fair value or not. Now, let's have a look at what the brokers are saying about data 3. Well, highest target price, 920, lowest 635, bit of a spread there, but they come out on average in the middle, where it is right now, about fair value at 746. We do have 4 buys and 4 holds, interestingly, and a good thing, no sells or strong sells. So none of those 7 brokers looked at this company and said, you know what, this thing's a piece of junk. And I actually do like it when I see that. Next thing I do is I come down to the EPS line, and I need to see bottom left, top right growth. That makes me feel good, okay? And I know it's historical, and you go, hey, Carl, you just told me, right, that fundamental analysis is also like driving, looking in the rearview mirror, and it is, but hey, we're looking for trends, aren't we? And now I'm a trend follower, and if I can see a nice steady growth in the company's earnings, even through a pandemic, even through supply chain chaos, even through inflation and interest rates rocketing from 0 to 5% in some places around the world, I think the management of this company is doing pretty good. Okay, and I reckon if they could sort out that mess that we just had, they'll probably sort out any mess that might come in front of us. And that's the way my brain processes historical fundamental information. I'm not saying, hey, this thing is cheap because X, Y, and Z. I'm saying, you know what? Management's done a pretty good job. The brokers, 7 of them, are expecting they're going to continue to do a pretty good job, so that we've got about 11% compound annual growth rate in their earnings over the next couple of years. Now, the market average is probably around about 7 to 8%, depending, right? Depending on if it's a good year or a bad year, it could be worse, it could be more. I reckon probably 7 to 8% is a little bit generous given current market conditions. So again, that doesn't matter. All we're saying here is it's growing at better than the market rate. Now, typically the stock ASX over here will have an average PE of about 15. I know that one for sure. Over the long term, 15 is fair value. 20 tends to be expensive. We've seen all the big stock market peaks come when that average PE, 1 year forward PE for the Aussie market is over 20. And we've seen all the big bear market bottoms, and it's happened. It's happened every time. Go back and check it. When those PEs get down to around 10, that's usually cheap. So 15 is fair value. So if this is growing at faster than the market's rate of return with better than the market's valuation, then my spreadsheet's going to do some maths and say, okay, well, that's actually pretty cheap now. It's not, though. It's got quite a high PE, I think, for that amount of growth, and that's just my opinion. But it's what the brokers are saying. So the brokers are looking for the median PE going forward is 25.5. And this is where I have to make a choice. Do I stick with my view of what's fair value, or do I defer to the brokers? And this is where I'm going to be different from many fundamental analysts you're going to talk about. Well, they'll say, my view is that the fair value is 15 and therefore I can't buy it because 15 is all I can pay for that. Right? Hey, good luck to you. I say it doesn't matter what I think. You know what? I wouldn't have a bloody clue what the right pricing for this is. I've got some ideas on it, but they're all very biased by my own personal experiences, and who gives up about my personal experiences? I say, hey, these brokers are probably pretty smart. Okay, probably. So let's just work upon what they're working upon, because at the end of the day, they're the ones buying and selling the damn shares to make it go up or down. It doesn't matter how many shares I buy or sell, it ain't going to change the price. So I say, look, if the brokers are happy to pay around 25 times for that growth, then who am I to argue? But I will check if that rate is actually attractive against the historical values. And I know I'm checking the past 5 years PE range, aren't I? And saying, look, it's actually a really high hurdle rate for this company, so that when I get a valuation of 831, I say, you know what, it's probably fair enough. I think this one's looking a bit cheap here. Okay, if that helps you out. And I know that was a long-winded explanation, but what we ended up with, which I think is pretty neat after all of this, hopefully you learned a little bit more about fundamental analysis and technical analysis and how to do it, but we ended up with a company that actually looks pretty good on the chart and pretty good on the valuation. That's not so bad, is it? Okay, let us keep moving. I've got to do one for Jai, TNT. Jai's been hitting me up on the Facebook, and I do want to do this one for him. And it's Tesserent. And I did tell Jai when he asked me this question, I said, hey, look, the chart's rubbish, so I'm not going to have anything nice to say about it. And I'm not. It's clearly get me the hell out of here, right? I don't want to own this. I don't care what the market's doing, really, to be fair, because let's face it, some of this period through here, the market's been going up. And you can see even in through areas like this where the market is going up and Tesserent's just terrible, really. And it's really terrible. So the market's going down and this thing's just going down even more. Now, the risk is I say buy 0%. Hold 0%, sell 100%. And the risk is, of course, I don't know, they do something good and it goes up tomorrow. I don't know what's going to happen. All I can say is, for me personally, there's 0% chance I could buy this one, and 100% chance if I had this, I'd be saying, no more pain for me, please. I've had enough pain. Okay. Why am I making my life a pursuit of pain when I could make it a pursuit of happiness and go find something like Data 3 that might be going up? So, sorry, Jai. Nothing nice to say about it there, but there is potentially a saving grace here on the valuation side of things. So let's see, and I do know what's going to happen here, if the brokers have anything to say about old Tesserent, which I do know is a technology company. I'm going to say, is it something to do with cybersecurity? Maybe, doesn't matter what I think, remember. But according to the one broker, and this is where you have to take the broker, it's not a consensus, is it? Because there's only one broker, so there's no consensus. But the broker ratings and targets with a pinch of salt. So the one broker is covering it. That should be alarm bells, just one. And generally, you know, if it's a small stock like this, they're generally bullish on it. But they are forecasting some returns in the EPS line. So I can do some analysis on this with 12% EPS growth and a P of 8. It looks really, really cheap here. So yeah, look, I'm happy to concede, Jai, that despite the chart looking really bad, it's probably cheap. In fact, well, see, here's the thing. You could say I'd be prepared to pay more than 8 for a growth rate of 12%. But because Tesserent is such a tiny company, we're not talking about, BHP growing its earnings at 12% with a P of 8, are we? We're talking about Tesserent. So you couldn't leave this at low. Okay, so yes, I could say, oh, okay, well, for 12%, I'd pay 15 any day of the week and still think I'm getting a bargain. And we go, oh, hey, now I'm going to double my money if I buy this tomorrow. But then we have to say, well, it's Tesserent, so we need to be a little bit careful. And maybe we can get to a 12% valuation if we're very, very generous on this. Okay, so I don't think your Tesserent's expensive, Jai, but there's so much could go wrong in this valuation because we've only got one broker as well. Okay, but hopefully that helps you out on that one. Let us head back to the charts, and we are going to do, let's go to the streamers here. John's got CXO, Liontown, and LRS, 3 out of 3 lithium stocks. And John, it's time. It's that time again in live market analysis ASX edition where we do the lithium review, isn't it? So I can get some nice hashtags on the videos afterwards and get some good clickbait going. All right, clickbaiters, if you're watching just for this clickbait, I got you. Let's start from the top. The lithium sector review. Argosy. I had said in the past, my favorite lithium stock in terms of its technicals, but we did say even last week that it was losing the battle and we were thinking of managing our exits, and you would have had to have, if you're following my system, sold at least a third, but probably more based upon the price action. So I think at most on this one, you've got 1/3 of your original holding, which I know we started buying, I don't know, even back here. We've been watching this one for so long, in the 20s and 30s. So at most, you've got 1/3. And this is not a go out and buy 1/3, but I'm saying it's all you got left on AGY, right? Probably. Because we can see what's happened with the price action here. And, we're really starting, well, certainly minus 1/3 there, but I think you can find more reasons to sell more than 1/3 at that point anyway. The short-term trend rolling over, the lower peaks there, the lower troughs, the crack through the candles, okay? So that is Argosy. I can hold 1/3, but no more than that on this one. And that's probably the best we're going to get as we move down this list, going to Allkem next. And this is getting pretty close. And we've got some scratchings here. And the last stock we covered, it was probably here. And I said, you need to see this before you could even contemplate buying it. We didn't get this. In fact, we got the opposite of this, didn't we? So there you go. So if you look at what we've done in the past on this one, it's all out. It's just getting out, past getting out. And there hasn't really been a reason to get back in, has there? So look, I'm going to say there's no reason to own Allkem at this stage for me, okay? Buy, hold, or sell. I can't see a reason to buy it. I can't see a reason to hold it, and I'll let you draw your conclusions on whether you want to sell it. But, I would say even a close beneath that trough low today is quite bad for this one. And we are seeing, I think, and I've said this many times to you, that, the lithium narrative, it's a great narrative, but it could catch out many, many people for many, many years as these trends change. And I'm not saying we're guaranteed to get this sort of a turnaround, but don't forget this company here was 2021's, in fact, it might have been 2020 and 2021, so go check it, best performing stock, almost on the ASX, but certainly in the ASX 200 because it got added to the list or the 300 or whatever it is, right? But look at how the trends change. Don't let a good narrative let you get stuck in this sort of stuff. And you see I've drawn arrows upon arrows upon arrows there in the past. Moving down the list, I'm going to do this super quickly because I know it'll take out not only John's inquiry, but a bunch of other people's inquiries as well. John, if you've still got CoreLithium, it's not because you've been listening to me. What did I say last time? I drew a lot of arrows as to what needed to happen. Did we get those arrows? None of them happened. In fact, I even said it could be up tomorrow. Look at that. There's my customary. I don't know what's going to happen next, but it could be through the roof, but I wouldn't buy this one. And there has not been a reason to buy it. In fact, it's gone beneath what I described to you last time as the last line of demand. Probably not a good sign. So buy, hold, or sell. There's no buy. There's no hold. I'll let you decide on the balance. Same on IGO. We've been saying all the same things on all of these companies. I can't see a reason to own lithium stocks at this moment. Now, I will be the first person to jump back on the bandwagon and bang the desk and say, hey, the lithium narrative is back on and you can start believing it again, because the market is starting to believe it again and the market is acting in a way. This is the one we said last week was the only one that looked good, and even then, look, circumstances have conspired. I might have even said maybe we can add some risk, and this is why we don't go all in. So if you took a third on that basis, you were very brave given what was happening in the rest of the lithium sector, but you would have lost money and you're probably cursing my name. But you might also have been very happy that you didn't add your entire position on this at just a third, because you've only been tagged on just that much. Buy, hold or sell in this, it's hard to even call a hold, but it's more likely to be a hold than the other ones. If this can put in just a half decent candle, I think it can begin again to capitalize on the good stuff that was happening before Silicon Valley Bank and Co. went bankrupt, bust, out the window. Let us keep moving then to Mineral Resources. I know it's also an iron ore stock. It's been holding on for that reason, but you can see here we've talked about lightening the load on this. We're never all in, we're never all out until it's time to be out, but I can't see a reason to be all in on this, okay? And there's nothing in the chart there to suggest that we need to be holding a full position. So if you're plus 1/3 on this, I think that's the most you are, to be honest. And that low there, the low of that candle is 78.50. And I think at a close below 78.50, if you had anything left on this one, minus 1/3 would be the way to go. That's my opinion. And people are screaming at their screens in disgust. Carl, how can you say that? Because Mineral Resources, it's a blue chip stock. It can't go down. It's too blue chip. Hey, maybe, I don't know. I've been talking about selling this one for a while. So buy, hold are off the table. I can only see sell there, but it is up to you what you do with it. And Sayona is the last one we'll do today. There's not a lot needed to say here, as much as people love this one. I know it's just so hot on the chat rooms. They've just gone into production. Well, whoop-de-doo. You know, and I hope I'm wrong, and I hope all of the, I don't know, maybe it was on this one, I don't know. I hope you get this. Honestly, in all sincerity, I'm not trying to be a smarty pants here, because I don't take any pleasure in anybody's pain. It's just not the way I am. But I hope you get this. I just can't see it happening, and that's the point. I hope you get it, but I can't see the market creating the environment where that's going to happen, okay? And because it's going into production and because things are even more crystalline clear for this one, where's that big surprise going to come from on Sayona Mining? Because it won't be in lithium minerals prices, which are still heading down, especially lithium carbonate at a rate of knots, obviously lithium hydroxide, because of the, there is a bit of a bottleneck in terms of the processing from your spodumene into your lithium hydroxide is holding up better, but that trend I do believe is also turning. While we're at it, let us do tour de coal. We might as well, because I can see some questions down the list on it. Whitehaven coal. The last time we talked about this, we said that at most you could be holding a third, and I'm going to rescind that now because we had been talking about stepping out the door. We're closing the door now on coal. I can't see any reason, right, to own this one anymore. And that is not to say that we aren't going to buy the hell out of this at some stage, but I can assure you when that occurs, it'll be doing stuff like this with beautiful candles, okay? And until then, I'm a pass. Let's go NewHope Corporation. This one's better than Whitehaven. It's still hanging on, and at most a third on that, but starting to lose the grip on it. I can tell you, if it closes beneath that low there, which is 510, I think your grip on that hold is should be released. Terracom, ditto on Whitehaven, but the writing's been on the wall for so long, everyone. And Yancoal bringing up the rear is the only one, isn't it? The only one that was hanging in there. But even today, unfortunately, we've talked about obviously all the supply up there. Even then, it conceded. Maybe there's a dividend. There must be a dividend in there. I hope there's a dividend in there. If there is a dividend in there, you're still okay. This is the only one, the only coal major I can happily hold. Did I spell that right? I'm sure you'll scream at me if I didn't. Let us keep moving. That's tour to lithium, tour to coal. We're going to do PMT for Chris. It's my intention to get to everybody's requests today, so don't worry, we'll get there. Got plenty of time. Patriot Battery Metals, okay. A new company. You can see that's all the data we had. It looks like in the past it got me talking about round numbers, and I reckon I said sell a third for no other reason, but it hit $2, and that's a bit flippant, isn't it? But it is the way I feel about these round numbers, especially when you've seen stocks consolidate at half the value. Didn't do it so much here in this case, but yeah, look. It's almost triple where it came from, to be fair. But those doubles and triples at round numbers are really important. And then these two candles here, interestingly, isn't it? I wonder what I said about that, because that third was there as well. Plus 2/3. I don't know. Maybe we still had 2/3 left. Maybe we had 2/3 left. Maybe it was only a third. But those two candles are pretty nasty. And then once you start to get beneath here, and here's your next one, isn't it? So I think maybe we're at the most 2/3. But watch this. Watch this. This is the level here, okay? So this is where hopefully the takeaway points from today's presentation come from. That's not a pod, that's a POS. All right, let's grab that one because I will need it. Let's copy that one and paste it over here. And you can see how the trend's changing initially with your supply side candles, right? Your supply side candles coming in at round number, right, which is manifesting the potential supply. We know there's latent supply up here, latent supply, right, and that supply is manifesting itself as the supply side candles, right? So for me, one third, and then your final third here is here. And I know it doesn't help you now, right? It's completely useless to you now, but this is not always about now, live market analysis. This is about giving you the tools for next time. So for me, minus a third on the round number, minus a third on the candle pattern here, and then minus a third on the break beneath that point of demand. So that actually, to be fair, I don't think you've actually got any left on this, is my opinion. And then it's done even worse again. It did try and get its, together, but it's just blown it, hasn't it? Buy, hold, sell. I totally concede that tomorrow it might be back up there again. I can't find a reason to own this. I'm sorry. Yes, there's a little bit of a shadow there. Saving grace. If you end up, let's say if you end up with one of these tomorrow, then maybe hold on for another day. But really, it's just biding time, isn't it, to get out? And look, I totally respect that this might be the best battery metal stock on the ASX right now, bar none. I totally get it, but it's not for me. Chris. Okay, Hanelli's after CSL, which is, I got no words for this one. I don't know. Buy, hold, sell. It's CSL, right? It's probably a hold just on the basis that it just trades in this range where, if I can zoom out, it's not making it zoom out for me. There we go. Normal. There's a light green zone, and then there's a sort of a pink zone, really. So it's just sort of in this range, and it's closer to the bottom of the range. And only for that reason I can go hold, because otherwise the short-term trend's down. The candles look terrible, but it's still holding the range. Look, beneath 273, I think you need to rethink your strategy on this one. But no, I agree. It's not looking fantastic there. And maybe we can have a look over here for Hanelli. Well, should we bother? No, I'm going to keep moving. I'm just going to keep moving on the basis that if it's not a buy right now, why are we looking at the fundamentals? We'll look at the fundamentals on the buys. Let's go to SHL super quick. I know Hanelli's sneaking in with two there, but I want to talk about this one because it still looks good, Hanelli. So it's one we've talked about in the past, potentially adding some risk to, and I can't see why you wouldn't add some risk. Yesterday's candle is actually very, very good, and today's candle is very, very good. Now, of course, don't forget, it's a live candle, and I do have another update. This will be the 1 o'clock candle that's just coming through. I've clicked. You can see it just got a bit worse. What a shame. Look, buy, hold, sell, 100% hold on this one, Hanelli. I think it's actually pretty good. Would I buy it? I'm pretty close to just adding some risk, because if the market rallies, I think this will do very, very well. And you can see what we've talked about in the past. It's changing its trend. We do have some good price action. We do have some great candles, and I really think this is a good chance to rally from here. So happy to hold it, Hanelli. And we have looked at the fundamentals in the past. Just in the interest of brevity, I'll keep going. You can review those previous tapes on YouTube. Neuren, I did want to talk about this one today. Looks great. Therese, do you need to sell it today? Not if it closes up there. No. Oh, yes, you do. Sorry. You need to sell some today. I know that sucks a bit for you, especially if you're a true believer, and especially given they just got their main drug approved by the FDA, and there's hundreds of millions of royalties coming in over the next few years. And you might say, Carl, that's just mental. Why would you do that? It doesn't make any sense just to sell because there's no other reason, but it got to $10. I'm sorry, that's just what I do. But the good news is I can't see any reason why you wouldn't still stick with 2/3 of your position, okay, and see how you go. This candle's still live. Let me say this. If the candle closes at $10 or better, just give this another day. Give this idea another day, okay? If the candle closes at $10 or better, give this idea just one more day, but watch it like a hawk, okay? Any signs of the supply side candles, and even then we're just looking to dust a portion of the position because the overall trend is so strong, we will then take some action, okay? But see how you go on that one today. Okay, let us go to Ramelius for Colin, and no doubt I should, for the clickbait, do a gold sector review as well. It looks good, but geez, gold's a trade for me. I've always said that. Gold is a trade. Let's have a look at the gold price, okay? So let us go to US dollar index. I know it's not the gold price, but you kind of need to believe that this is going to go down to facilitate. Where is it? Where is it? This one to continue to go up. Look, I don't mind this. I think the US dollar has a bit more to fall, okay? We were thinking that was a key pressure point area for a while if you're watching the Thursday sessions. And, Khan, unmute yourself and let me know, sorry. What we were looking at there, gold. I don't think we got too far down the track, did we? Neuren, maybe we missed Neuren, sorry. How long were you stuck there for? Not since Tesserent, surely. Wrong screen. Gosh. All right. Let me do one thing. Now, if I can, there must be a way. Normally I can unmute Khan so you can actually shout at me. Okay, sorry about that. There we go. Where did we lose? Where did I lose you, Khan? Neuren? Okay. Where did we lose? Can't see the charts. Can't see. I just want to figure out where we were. Change your screen after CSL. After CSL. Okay, so we did CSL, and I think I went back to say, are we going to look at the fundamentals? And I said, well, there's probably no point. So after CSL, we did a few. Geez. Okay, I'll catch them up. SHL. Sorry, everyone. SHL. I think it looks great. Remember what I said about it. There was a candle there. I did a refresh. It got a little bit worse, but it's still a very good candle compared to the rest of today. And if you don't believe me just how good this one is, check this out down here. It's so strong. So I'm a happy holder there. I'm looking to add some risk. Just give me a decent candle and I'll add some risk on that one. So very happy with that one. Then I'm pretty sure we flicked over to Neuren, and I said, look, my typical response to something hitting a big round number, and 10 is as big as they get, is to automatically sell a third here, okay? But the candle's so strong. I'm expecting supply there. The way supply actually manifests itself is in one of those supply side candles, okay? That is the supply actually there. Right now, the supply is not manifesting itself, all right? So give it some more room. If it closes here or better, I'd happily not act upon that third until I see the candle. And then I think you still need to take a little bit of profit, but still holding the 2/3 on that one. And then we switched over to Ramelius, and I talked about potentially doing the gold review. And I talked about the gold chart, which is coming up in a second. And I thought it looks pretty good. I'm a little bit concerned about what could happen up here. That's all. So let's watch out what happens there. The long-term trend held. If you watch the Thursday sessions, we talked about that also happening. Now, let us quickly go to the US dollar index, which we said is starting to roll here. So that's helping gold. So my view on gold is it's only ever a trade. I'm not a gold bug. Okay, so I'm happy to trade it if gold looks good. And I think gold is supporting Ramelius here. So would I go a third on Ramelius? I might just chicken out a little bit. Okay, now what I want to see is I expect there to be supply here. Okay, and if you've got it, hold it. I can do that part of it quickly. So I'm happy holder, but am I going to buy? Probably not going to buy. Let me just see how it responds to that supply. We might just even get a little uncertainty candle here. It doesn't have to even be a down candle, but just a lower shadow, and a lower shadow followed by a close. And I'm going to say above this high here, that high is 111.5. So let's say 112 or better. Then I'm happy to go plus 1/3. Okay, I know there's a lot of conditions there, but it's just what I want to see. Okay, but otherwise, on the basis of this improving, that we're above the long-term trend. The long-term trend appears to be holding again. Short-term trend is turning back up. I'm okay with a hold at the very worst. Let's just try and find some buys in here. Look, I think Newcrest is fine. Would I buy it? Today's candle's not that convincing, but I can certainly hold it. I'm trying to find you a buy in the gold sector. I think this one's pretty good actually. A better candle today. Look, I closed near the high, and that high there is 11.53. So if we could close near 11.53 on the basis that we have done what I wanted, we've talked about this, the points of demand are rising. We've taken out that middle point of supply. So you can see here, there's your POS, there's your pod, and there's your pod. Okay, and if I draw in the price action just to confirm for you, you'll see we get a little one in there and then straight down. I mean, it's vicious into there, but we are back into high peaks and high troughs. So on a close at 11.53 or above, I could happily go plus 1/3 on that one, but only a third because I need to see it do some more stuff before I want to add any more risk. You might have still had a third just from the fact that it was in here, because we've been talking about this one. I reckon we started to add risk down here. Okay, that's how long ago we're talking about that one. Let's go Perseus, which I think is okay, but I'm just not happy with this. And I don't think it's as good as Northern Star. Okay, so I'm going to pass on that one. SLR Silver Lake. No. Look, these are good candles. Don't get me wrong. These are good candles, right? But I just don't trust this and this right here. So maybe there's a bit more of a bounce into here, but probably not much more than that. If you've got any other golds, let me know. But I think that's a pretty good review for now. Let us rip through the rest of these so everybody today gets their question answered. I haven't forgot you on the streamers. I'm going to get to you in a second. Acrow, formwork, happy holder here. I can't see anything as bad as the market is to give me reason to sell. And if you're unsure again, this is where your eye needs to drift down to and say, Carl's relative strength comparison indicator. And this is not the one you get off the shelf. This is one I've made. I made it many, many years ago. It's worked over many years. I've used it for many years, and you can almost just trade on that. If that was an indicator on any other technical analysis platform, it'd be worth the weight of that platform just by itself. So that one's saying you're fine on there. So happy holder. Would I buy it? I'm just not seeing the right candles to buy it just yet. But, you know what candles I need to see, but otherwise that one is fine. Because I have promised that if it does look good on the chart, we will look in here. Let us look in here on this one, and we might well have a little bit of broker coverage for ACF. It's one we've talked about many times, haven't we, ACF? And we've got the $1 target. We do have 3 brokers covering. So $1 their target, $1 their high, 88's their low, 94, which allows 20% upside from here, is very impressive. 1 strong buy, 2 buys. In terms of their EPS, it is not bottom left, top right. We have had an issue through here, but otherwise it looks very good and is expected to continue to do so. But not huge growth. 4% is below the market average and well below, and we will not do this. We're going to not turn that off, go back to low and go back to the broker's consensus. So you can see that the brokers are marking it down because that forecast growth is low, and that's why the PE is so low at this point in time. Is that the right PE for that growth rate? I actually think it is. I don't think there's any reason for me to argue with what the brokers are saying. Where does it compare to the history? I think it's probably low, and maybe that's being a smidge, and only a smidge too harsh, but only a smidge. Maybe you could get up to an 80 valuation, but even then, that's me starting to pull numbers out of the air, and I won't do that. So let us say that I think the brokers are a bit optimistic here. I wouldn't say I agree with their valuation, but that's their valuation. Okay, so you decide. I don't think it's a bargain, but the brokers think there's plenty more in it. Hey, I don't have to agree with the market. That's not what this is about. This is me telling you what I think and then telling you what the market thinks. What does the market think here? It looked okay. Unfortunately, it did start. In fact, it started, I think, look pretty good through here, but it's unfortunately just succumbed to the broader market weakness, and even here, it's starting to look very sketchy. So unfortunately, buy, hold, sell. I'm not a buyer on this one. I can't even call it a hold, and I hope it recovers. I hope it, because I know people are on this one. But I can only see sell here. I'm really sorry. I can only see sell with the trend being confirmed. And here's kind of the killer. And again, you've got to be a bit proactive. You can't just wait for me on Tuesdays to say, oh, there's the price action, there's the POSs and the pods, and there's the minus 1/3. But for me, it just stands out clear as day right here, where I believe if you think anything I have to say has any value in it, I believe you are stimulated to act here on the break of that. And there was probably a few before that where really on this candle here, to be fair, that candle came back pretty well, didn't it? But this candle here, not great. And then certainly building through there. So Grange, I can't find a reason to own that one, unfortunately, for you, Gary. Serene, we've done SHL, change screen, people shouting at me, need to see the charts, please. I appreciate that. Sorry about that. Wrong screen. Do it again. The ire, the fury, ASB, all justified, of course, from Terry, ASB. Is there any hope here? Is this a turnaround play? It's starting to just beat the market a little bit, only because the market's getting belted and this thing's actually holding up pretty well. But Terry, I don't think there's enough in it for me to call it a buy. Maybe I can squeak in a hold, but I don't think this is the best chart out there, is it really, to be fair? I mean, this is struggling. This is still down. And the last few candles negating the good stuff that was building through here. Look, neutral at best. If you're really, really keen on it, maybe there's a hold. Certainly if it's starting to get back below 174, I think you have to concede defeat on this one and say it's not ready yet. It needs some more cooking, and maybe there's a low somewhere else down here you can look to buy into later on. But I just don't think this is the one for me. Sorry, Terry. Now let me get to the streamers, because I'm sure they're also rampaging over there because I've neglected them. RFT, which I'm not familiar with. Let's have a look at that one. RFT. Rectifier Technologies. This one is from French NZ. Hello, if you're tuning in across the ditch. I think it looks pretty good. But would I buy it? I've seen plenty of worse things today. I can go hold. I don't think I'm a buyer. I just don't feel like buying anything today. Unless it's just top, bottom left, top right. It looks amazing. Acrow formwork sort of stuff. So I think you can hold on to it. And let us then, we've done NST for you, David, which is great. DGL for Brendan, which looks half decent. Happy to hang on to this one, Brendan. You can see here that it is very much beating the market now, isn't it? So this is a good sign. It's trying to do high peaks and high troughs. It's trying to do some good candles. It's trying to do short-term uptrend. It's trying to get through this long-term trend and change it around. I'm pretty happy with this one. Look, I'm a happy holder here. I could add some risk. Let me give you a level. If we see a close, nice white candle close above 190.5, so 191 or better. So let's go close greater than, just so I can remember it for next time, 1.91 equals plus 1 is what I'm saying on this one. But until then, just a happy holder. Let us whiz through the rest to get everybody's questions answered. When will I start adding a 1/3 for CSL? Too much needs to happen, Huzul, before that can occur. We need to see the high peaks, high troughs, the right candles come in. Okay, XRF for Jam Nation. Happy holder. I've talked about this type of chart many times. It is shooting lights out down here, but only because the market's tanking. I would start to get a little concerned. And I know, we talk about the high quality of the stock and everything. They do sort of mining services analysis of samples and things like that, and selling the equipment to do so. If it starts to close beneath that low there, 98 cents, I just think you take a little bit of just a precautionary measure. I get the quality, I get the trend, that one. But I just think on a close beneath there, what's the harm? What is the harm in just taking a little bit of a precaution and doing that? Okay. And then if I'm wrong, right, and it does this, hey, you've only got out a third, you're still plus 2/3, and you can always get back in if the right candles appear. But I just think given market conditions and what I said at the start, I said, last week as well, trying to get a bit more neutral in our risk levels, that's probably the smartest way to go. Okay, JLG for Phil. Not a lot going on here, Phil. I would suggest to you we are neutral at best on that one. Buy, hold, sell. I could probably just squeak in at a hold. And if it was to close beneath, I'll give you a number here because I want that low there. If it was to close beneath 606, I think I'm moving to a sell on that one. In fact, I'm quite certain beneath 606. So close less than 6.06 for me equals minus 1/3 at least, but maybe more. How am I going with time? I've got time to finish the lists as they stand, so please don't put any more in. I can see where the final requests are, and we are going to do hot chili for Josh. And Josh, I think you can analyze this yourself. From my perspective, you know what I'm going to say. I can't get excited about it. Long-term downtrend, short-term downtrend. It is, let's face it, compressing within a range. And look, there is the possibility that it does that, but the probability actually is probably more sideways than anything, but given market conditions, potentially to the downside. And I think probably some people are listening to this, not to say, well, I'm going to act upon what Carl's saying. And I get that and I feel you. You've held hot chili forever. You've heard all the great stories about it. You are subscribed, like click subscribe now to the narrative, right? That's your narrative. You love it. You'll be there until the day hot chili doesn't exist and the world is swallowed up by the sun in 5 billion years. I get it. I'm not going to change your mind. So the only value here is saying, well, Carl doesn't like it yet. Okay. Where will Carl like it? I think I've given you enough info and education on how to figure that out. Okay. So yeah, I might say something's a sell and you might completely ignore me, but you need to know, I guess, how the market rates the stock and when that is improving or not. So I think you know what I think about that one, Josh. Let us go to, we've done the gold review there for Angus. I've done your two, which is great. And Toma was asking about one gold stock I haven't done, which is Westgold, which I think looks quite good actually. And I can get to a hold, but I'm not a buy. Today's candle is not fantastic. I wouldn't want to see it really close much lower than where it is. That upper shadow bothers me. And the fact that it's still in this long-term downtrend zone is also concerning. I think we've seen better ones out there, this one, Toma. But what could make it look better is a very quick resolution of the supply that is clearly manifesting itself in the system there. And a nice higher trough being put in. So we see something like this with some nice white candles and preferably holding on to that short-term trend zone, which we're hoping will act in here as an area of potential dynamic demand. Okay, so something like that, that's going to look much, much better. And then I could actually contemplate adding a third, assuming it's the best thing I can find on the day. Angus is asking for a couple of rare earths. Hey, I've got all the other big hashtags in there, so let us add rare earths to the mix. ARR is not looking fantastic. I think we can all agree now that understanding what I like, this is not what I like, and therefore buy is off the table, hold is off the table, and you decide what you want to do next. But I cannot see any redeeming features in here in terms of demand beating supply, people coming into the market, and I'm happy to concede that tomorrow could be something different. ARU, which we've been very positive on in these sessions until recently. You can see how I've been saying you have to listen to the market, everyone. Listen to the market. The market's talking to you. Minus 1/3, minus another third, minus a third. It's so close to not having anything left on this one. And I'll reiterate that a close beneath that low of 52.5, you're out. So this you wouldn't be holding 2/3. You'd be out of that one completely. Not looking too great. I know I'm not doing fundamentals, but I'm trying to get everybody's questions done. So let us finish. The streamers are done. I've got one left here, OCL. And, I knew I was going to find some nasty charts today. Now, forget OCL. I know what you say, says Deb. Oh, Deb, am I that predictable? Hey, Deb, here's what you didn't know I was going to say. I'd say if you can short this thing, I think you should short it. That's the worst chart I've seen today. It's really bad. And I'm sorry, Deb, if I've outed you there as an OCL lover, but it looks really bad. Everything is setting up for a textbook short. Where could it go down to? Oh, that makes me even more excited about shorting this one. Can you check if we can short this one on the platform? And I'm not trying to be nasty to Deb. I'm just saying there might be a trade here, everyone. And if you walk in thinking black and you walk out thinking white, but you found an opportunity, that's okay too. This looks awful. Anyway, can't get back to me as I head over to here and say, if you're not registered for these sessions, come and join us in the Zoom session. It's always the best way to do it. Head to thinkmarkets.com/au webinars to do so. But I'm on 3 times a week. So today's the ASX edition. Thursday, I'll be doing the macro. So how to trade the NASDAQ, how to trade the Russell 2000, how to trade the Dow Jones, how to trade the ASX 200, how to get short stuff. Like if you've got a self-managed super fund that is getting belted or you're worried it's going to get belted, how to protect your portfolio in a bear market, or if this bear market gets much, much worse. There's a bunch of commodities we can trade. You could be trading foreign exchange to get that exposure where it's going to benefit if the world unravels. Okay, that's the Thursday. And then on Friday, probably equally as miserable as the session we just looked at, is the USA shares, but less miserable because we offer CFDs. We offer CFDs on Aussie shares as well, but we offer CFDs on USA shares, and you can look into some shorts on those. Now, if you're not a client of Think Markets, then you really should be, because we are the good guys in the Australian broking scene. We have all the products you need to trade, including your Aussie shares there, $8 flat rate, hidden and share sponsored. And of course, as I alluded to before, you can trade your foreign exchange, your crypto, your commodities, and your indices, all commission free, long and short, with your shares as well. We are an award-winning broker. We keep winning them, keep getting nominated for them, because we have the best platforms and, most importantly, I believe, the best customer service. Ring us up and talk to us. Don't waste any time on those chatbots, right? That, you say, hey, I need some help with my account, and they reply with Tuesday, because the AI is on the fritz, all right? Ring us up and talk to us, and we will get your problems sorted. If you like what you saw today, hit subscribe or tell your friends. Send the link, share this, and send it to someone you think will get great benefit out of listening to me speak 3 times a week. Probably you're going to struggle to find that person. But hey, if you do, send them the email and hit the like button to let me know you like what I'm doing, so continue to do more of it. Apart from that, it has been a pleasure chatting with you today. All the best, and I mean that, for your portfolios until we catch up again. Now, before you run away, it's important to mention that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it very carefully and seek the help of a financial professional as well. You can learn everything you need to know about Think Markets and our products from our product disclosure statement. That's our PDS, which you can download from our website.